This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It's a Thursday morning, inching slowly but steadily towards the end of the week. Well, how are global cues, as we always start with? They're kind of mixed. That's perhaps the best way to put it. Lots to talk about here, as always. Guys, hi, good morning.
Hi, morning. I think the optimist in you has woken up today because you said mixed, but I don't know if, the bulls are looking at it that way, considering the way crude is going and the way the US 10-year yield is going. So I think you're feeling good about this morning.
Just look at the market and what it did yesterday, right?
Yeah.
And I think that is what is kind of sparking that hope, not optimism, but that hope that maybe it's not going to be as bad. Let's just quickly tell you, how the trade setup really stands as we begin this session. I'll start with yesterday's session, right? So the Nifty saw a solid bounce. Now, we basically broke below 19,600 early in the session, made a low of about 19,550 or so. 554 was the low. But by close, we were back above 19,700. The 61.8% retracement, which we've been putting out, is 19,605. So that got broken intraday, but there was a 100-point bounce on top of that. And that's the reason why I'm saying it's a real body, good, solid bounce that we saw in the session yesterday. It was not alone, India alone. I mean, that has to be noted. Asia started recovering within the first hour of market open here. By the time we hit mid-afternoon, Europe started those markets were higher, and US futures were indicating a 1/3% sort of uptick as well. So this is the final close in the US. The Nasdaq is up about 1/4%. The S&P is more flat. I mean, so you look at the other indices, Dow and the Russell 2000, mostly flat on the equity side. But equities is not the story in the U.S. It is what is happening on yields. It's what's happening on the dollar. It's what's happening on oil prices. And then, let's get straight to that. And that's why I'm saying that price action remains adversarial for emerging markets. Price action in terms of bond markets and the other markets, not equities. So the 10-year went up 7 basis points on top of what it did the prior session. It broke back above the highs of the prior session, and we ended at about 4.61%. That's back to fresh 2007 highs, right? So this is the troublesome part. This is basically the risk-free rate, the global risk-free rate, and it's an anchor to rates around the world. And when this moves up so sharply in a short period of time, I mean, investors and everyone will sit up and take notice. It's got implications through and through across the board. The question is, will it kind of cool off? Will momentum flag here? Because there was no real news flow for this to move up another 7 basis points overnight. There was no big data point or, economic data which beat expectations or anything of that sort. Nothing. Now, on the back of it, the dollar is also pushed higher to new year-to-date highs. It's now, at 106 points, closer to 107, right? So again, this is bad news for emerging markets and bad news for commodities, etc. as well. Dollar is on track for the 11th straight week of gains. And in this period, by the way, the dollar index has gained 6.5%. So that's quite something. Oil prices are also running higher, and that is the third leg, which I think is the problem area. Oil prices ended almost 3% in the green. They are now at $96.50 a barrel. And there's no sign that that's cooling off either. Overnight, we had the EIA confirming that oil stockpiles in the U.S. have dropped to critical levels. So we'll this is something we'll come back to and discuss because implications as well. On the U.S. government shutdown, today is Thursday, right? The government shutdown, so to speak, without a spending compromise between the Democrats and the Republicans happens over the weekend. And still, there were some headlines out of Washington, but there was nothing which indicated they're close to some sort of a compromise. Now, I have to say, it always gets done, right? It's a sort of yearly kind of annual drama which plays out and then it gets done. That's been the history for the last 40 years, no less. And hopefully it'll get done this time around as well. On the way up, just to kind of tie all of this back to levels, Nifty resistance is at 19,759, which is, by the way, the 20-day moving average. We're very close to it as of yesterday's close. On the way down, the low of yesterday, day before yesterday is yesterday, which is I'm getting mixed up with the days. Wednesday's low is 19,554, and that should not break on the way down. There's 150 points away, a distance between yesterday's close and the low, so I think that should work. And on the Bank Nifty, defended Monday's low of 44,400 on a closing basis. We ended at about closer to 44,600. Bank Nifty, although is the weaker of the two indices, something we've pointed out consistently. Resistance for the Bank Nifty comes in at 44,778, which is the 61.8% retracement of the August to September move. And then, the 20-day moving average, which comes in at 44,000, almost 45,000, 44,998 is that level. So those are the two numbers to watch out for on the way higher. The GIFT Nifty will come up on your screen. I would still say stay on the sidelines. We got a decent move yesterday, but it's just not looking very constructive out there with what the three things are doing: yields, dollar, and oil prices. So I would, the recommendation would be, why take a chance? Especially this is, of course, all trading, day-to-day advice. Why take a chance? Stay on the sidelines. Watch how all of this develops. Hopefully, those three things will cool off, and that will provide a clearer, more constructive picture in the near term. Sonia.
Absolutely. The bears have the upper hand, right? At least in the last fortnight or so. And it looks like that could continue even today. Today could be a day of profit taking. That's the sense that you get when you look at a lot of the internals, right? The starting tick on the GIFT Nifty is about 10 points lower, but it could get worse from there given what we have to deal with. The biggest headwind, of course, as we've been saying ad nauseum, is the way Brent crude prices are rising. That's also because what's happening in the global markets. The US crude stockpiles have fallen substantially, and hence there are supply concerns rising across the globe. In fact, adding to the supply tightness, yesterday there was a comment from the Russian President Vladimir Putin that the government in Russia should ensure that retail fuel prices stabilize after a jump that was caused by an increase in exports. So there is a big supply pressure that's kicking in across the world, and that is what is giving rise to Brent crude price. And of course, that doesn't bode too well for our own market. So that is the big headwind that we have to deal with. The other big headwind is the US 10-year yield, which is now at a 15-year high of, I think, 4.6%. So it surpassed that, 4.5% mark. That doesn't bode too well for risky assets either. And hence, I'm saying that it could continue to be a day of profit taking for the market, a sell-on rally market. Today, of course, there's no rally expected. But if you look at what's happened in September, right, our markets are not bad. It's still a gain that we've seen in September compared to the rest of Wall Street. Look at that. Nasdaq down 6%, S&P 500 down 5%. So in that sense, the Nifty continues to be in a range. 19,700 to about 20,000 is the range as of now. Yesterday also we closed at the high point of trade. So the bulls are trying their best to fight back, but the global cues are just too strong, and sort of putting a lid on the market gains. And perhaps that could be the way it shapes up today. By the way, Europe also had a deep slide overnight. So things are not that great.
Well, that's right. Sonia, and yesterday all the attention was on the banking names, but two large cap stocks, they came in there and they performed. ITC and Reliance Industries, the intraday chart should tell you the picture. The reason that the Nifty ended at the high point of the day was because both these two, they were the darlings till recently, and both of them went through a phase of correction. And yesterday, in fact, they did well. So let's hope that one of these stocks or both of them, they can support the Nifty, because otherwise, cues are looking a little bit feeble this morning, as Sonia as well as Prashant said. Now, the Nifty ended higher. You'll be happy about that. But the traction continues in the broader markets as well, because you had the mid-cap and the small-cap space. There were plenty of stocks that were doing well. I'm not sure how long this can last, because dollar index, crude oil prices, yields, all of them have moved to not very favorable levels. The Nifty is up close to around 1.5% in September. Remember, we've corrected a goodish bit, close to 500 points from the recent peak. But, today we play out monthly expiry, so the final hour of trade will be rather volatile. The bulls, they'll be counting on yesterday's low, which was closer to around 19,550. And we said yesterday that if you have the appetite, you could buy closer to that level. And that trade did work out yesterday. So that's the line in the sand, 19,550. What did the FIs do? Well, they added short positions yet again. Close to around 14,000 short contracts is what they added. And the short positioning now moves to around 55%. Just around 7-8 trading sessions ago, this short position was only 35%. So it's been a big bounce. From 35%, it's gone to around 55%. And the chart should come up for you on the screen. Just around 5 sessions ago, the FIs were net long with close to 20,000 contracts on the net long side. Now that's come down. It's now a net short position. If you'd got a graph up, it would give you a better picture. From a positive number, that's from a net long position of 20,000 contracts, it's become a negative, a net short number of close to 20,000 contracts. What are the levels you're looking at? Since it's expiry, we're looking at two strikes. That's the 19,800 call, 19,600 put. Both of them have close to around 1.5 crore shares out there. But you'll say get a little bit narrow on that range. So that's the 20 and the 50 DMA. The 20 DMA is at around that 19,760. That's going to be an important level. I'll tell you what, if you can get past that and trade above that level, then you'll be in for a bout of short covering because this market is net short. But otherwise, on the downside, the 50 DMA is the level that you should be looking at before you go to yesterday's low. So keep an eye out on that mark. It's going to be that sort of a range-bound day. But if you could break those levels, particularly the 20 DMA, then the bulls will feel that they are in business. But otherwise, the bears will be feeling much better this morning, looking at all the cues that are stacked up.
Okay. By the way, lots to talk about over the next 2.5 hours. So let's kickstart the show very quickly. First up, we have an opinion from Ridham Desai of Morgan Stanley, who says after two strong absolute and relative quarters, the broad market could give up their performance to large caps as global trading conditions appear more challenged. He says given the election calendar, the realized volatility of Indian stocks may have troughed in the short run. He adds, while the quarter ending September is likely to be softer quarter on quarter for earnings, the coming quarter could produce an upside surprise in terms of growth, thanks to both the festival season and special events like the Cricket World Cup.
Okay, Mishra Das of JP Morgan weighs in as well. He says that Asian equities outlook is mired and stickier than anticipated inflation, a strengthening dollar and rising volatility. He says the seemingly dull index in 2023 hides dispersion and multiple rotations, and we are likely to see more. He adds, as markets grapple with an environment of higher for longer rates, we see global equities and particularly long-duration growth stocks coming under more pressure.
All right, let's also get you some money market views this morning. We begin with Parul Mittal Sinha of Standard Chartered Bank. She says that the dollar INR has inched up higher during the week, driven by dollar strength, higher oil prices, and continued FPI outflows. She expects the dollar INR to trade in a range of 82.80 to 83.50 in the coming week, and continued dollar strength and higher oil prices.
Well, on bonds, we have Dhaval Dalal of Edelweiss, who says bond market sentiment is likely to be subdued amid rapid rise in U.S. Treasury yields and hardening crude oil prices. He says this will likely offset positive news on borrowing index inclusion and good monsoon recovery in September. He expects the 10-year benchmark yield to trade in between a range of 7.15 to 7.25% in the near term.
Well, we have a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment. But we're looking at Bharti Airtel, Reliance Industries, MCX, Barbecue Nation, Dixon Technologies, Trident, Oberoi Realty, and ONGC. All of them will be reacting to positive news flow. While on the flip side, Vodafone Idea and ICICI Lombard will be reacting to negative news flow.
Okay, well, that's basically the lineup in terms of specific stocks.